Welcome back to Investing Talk podcast. Today, we are undertaking a critical examination of the data and recent news surrounding Circle Internet Group. We want to answer that central question on many of your minds. Is Circle Internet Group a good time to buy now? Before we jump in, just a quick housekeeping note. If you appreciate this analysis, please hit that subscribe button, like this content, and leave us a comment below. And yeah, if you have a specific company you want us to look into next, please let us know in the comments section.
Right. And our mission today is really to give you the full picture. We've got a pretty robust stack of recent sources here. They detail institutional activity, significant global partnerships, and there's a highly visible financial calendar for Circle Internet Group.
So we're going to unpack what these confirmed catalysts mean for the stock, how the market is currently positioning the company against its peers, and crucially, what all these high-stakes rumors floating around could mean for potential volatility as we head toward the new year. Okay, let's start with the recent past then. Say the last 3 months, July through September 2025, just to establish the current momentum. We need to know what floor Circle is standing on, before we look at the ceiling of potential growth.
Definitely. The key narrative emerging from Q3 seems to be renewed confidence, particularly from institutional funds. We saw notable activity right up to the end of September. Covenant Asset Management LLC, for example, they disclosed a brand new position on September 29th.
A new position? How big?
They purchased 2,000 shares of Circle Internet Group.
Okay, wait a minute, though. I mean, any new institutional interest is generally positive, right? But 2,000 shares, for a firm like Covenant, that sounds less like a major conviction bet and maybe more like a toe-in-the-water kind of starter position. Should we really view that relatively small purchase as a strong signal?
Yeah, that's a fair challenge. It's maybe not the magnitude of the purchase itself that matters most here. It's more about the timing and, well, the firm's reputation. It signals a major institution officially establishing a baseline holding just ahead of the critical Q3 earnings.
Ah, okay. So the timing is key.
Exactly. And our sources noted that despite the small volume, the market still reacted positively. Shares climbed about 1.9% in late September. It seems to reflect this broader optimism that more institutional money might be willing to start accumulating.
So it suggests the smart money is maybe establishing exposure now, sort of hedging against a potential strong earnings surprise?
Precisely. It's more of a qualitative signal rather than a huge quantitative stamp of approval, if that makes sense.
Okay, got it. So looking back a bit further then, how did the core business actually grow in August?
August was really focused on expanding the utility and the reach of their primary products. On August 14th, Circle announced new partner integrations with Kraken.
Kraken. Okay.
Yeah, and this isn't just a handshake agreement. It's a move designed to really broaden global access to their key stablecoins, USDC and EURC.
So what does that integration actually unlock? I mean, for institutional users or maybe sophisticated retail users, is this aimed more at retail adoption or is it purely about increasing institutional liquidity?
Well, it's a bit of both, really, but mostly it seems focused on monetization and reach. By making USDC and EURC easily accessible through a major exchange like Kraken, they are definitely accelerating market adoption and improving liquidity, too, which, drives the underlying value of their reserve assets.
Right.
And crucially, they also finalized key contract pricing agreements back in August. This is critical for enhancing their revenue visibility.
Ah, revenue visibility. That's always important for these high-growth names.
Absolutely. For a company growing this fast, having predictable revenue streams tied to adoption metrics, well, it stabilizes investor confidence quite dramatically.
Okay. And July provided the anchor then, did it? When we look at the volatility that's just inherent in digital assets, how stable was Circle's stock performance?
Remarkably stable, especially considering the sector. Despite all the sector-wide volatility we saw, the company's 50-day simple moving average remained pretty robust. It was around $146.77 throughout July.
That's interesting.
Yeah, for a highly volatile segment like digital asset infrastructure, seeing that 50-day SMA hold firm like that, it implies that institutional support is maybe prioritizing stability over just speculative swings.
So it suggests there's a consistent, maybe defensive support level for the stock?
Seems that way, which is, frankly, a rare and comforting anchor in this space.
Yeah, no kidding. That structural stability is reassuring. But let's shift gears a bit to current valuation. We've established the foundations, sort of, but what's the market actually expecting in return for its pretty substantial valuation? Based on the data, Circle is positioned as a leader, right, in the digital asset infrastructure segment.
Absolutely. Yeah. The market definitely views them as the infrastructure linchpin here. As of late Q3, Circle Internet Group had a market cap of $29.14 billion.
29 billion. Wow.
Yeah. And what's maybe more telling is that they trade at high multiples compared to, say, traditional financial firms. This valuation pretty much implies that the market is pricing in extremely strong growth and, frankly, near perfect execution over the next 2 to 3 years.
Okay, but high multiples always introduce high risk, don't they? If they are valued at $29 billion based mostly on forward momentum, what's the immediate risk if upcoming results fall even a little short?
That's the core tension for any investor right now, isn't it?
Mm.
Because this valuation prices in flawless execution and rapid scaling. If they miss expectations, let's say on new customer acquisition or maybe margin expansion,
Yeah.
if they miss by even a small percentage in the Q3 earnings, the market could see a really outsized correction. Yeah, they are not judged like a slow-growth legacy company. They're judged entirely on scale and forward execution. So understanding this positioning is absolutely key for you, the investor, because it really frames the level of expectation for every single upcoming financial release.
Right. Speaking of releases, let's transition to the visible financial calendar. What are the confirmed date-specific events that will undoubtedly drive sentiment over the next, say, 4 months? This is the official stuff we know is coming.
Okay, the immediate catalyst is the Q3 2025 earnings release. That's set for October 22, 2025. Investors will be intensely focused on confirming platform scalability. We need to monitor revenue growth, yes, but also things like new customer acquisition rates and, maybe most critically, margin trends.
Margin trends, right.
Yeah,
Do the economics improve as the platform scales?
exactly. Or does the cost of compliance and expansion just eat away at profitability? That's the question.
And we get that crucial forward glimpse early next year, too.
Precisely. January 21, 2026 is the date marked for the Q4 2025 preliminary results. That release really sets the early tone for the entire new fiscal year.
Okay. And beyond the company's own internal reports, we have those structural market events, right? Things that will impact the stock price, even if Circle doesn't say anything.
That's right. We need to watch for potential transient volatility driven just by portfolio mechanics.
Mm.
November 8th, 2025, for instance, is pegged as a date for possible ETF constituents rebalancing.
Ah, the rebalancing shuffle.
Yeah. Fund managers making allocation shifts can easily introduce short-term, kind of directionless price swings for a company with this kind of profile.
And then the market gets a full institutional health check in December.
Yep. December 10th, 2025 marks the start of the institutional 13F filing season. This is basically the report card on whether the big players are increasing or decreasing their stakes. Market participants will be anticipating potential shifts in that institutional ownership profile.
So a reduction could signal concerns maybe about regulatory risk or growth slowing down.
Could be. While an increase would obviously provide another major vote of confidence.
Okay. And finally, we should probably note the macro check on utilities scheduled for the end of November.
Right, the U.S. Thanksgiving holiday, November 27th. Now, while it's not specific just to Circle, investors will be watching the holiday payment volume data across the whole economy. Strong or weak data there influences sentiment around the actual real-world utility of digital payments infrastructure.
Which directly affects the long-term thesis for Circle. Makes sense.
Exactly.
All right, let's pivot now to the sources that maybe drive the maximum anticipation. The high-impact, unconfirmed catalysts. These are the elements that inject the real speculative volatility into the stock, aren't they?
Oh, absolutely. The primary chatter seems to revolve around potential M&A activity. Market talk suggests Circle could be a strategic acquisition or, takeover target for larger fintech or maybe established payments firms, possibly ahead of year-end.
A takeover target.
Yeah, given their commanding position in stablecoin infrastructure, they are a significant prize.
Okay, if Circle is a takeover target, who do you think is the most logical buyer? Is it like a traditional bank trying to secure a future in crypto? Or maybe a payments giant like Visa or MasterCard looking to dominate cross-border flow?
The consensus seems to lean more towards the payments giants. A Visa or MasterCard, for example, could instantly leverage Circle stablecoin tech to drastically cut cross-border settlement friction. Or maybe a large global fintech firm looking for a compliant, established pathway into digital currency rails.
But wait, wouldn't any M&A announcement immediately halt the organic growth story they're currently selling?
That's the thing. It does. So investors have to decide. Are they buying Circle for the potential quick exit via acquisition, or are they betting on the long-term organic growth trajectory?
Yeah, that introduces fascinating conflict for investors.
Right.
Okay, what about organic growth on their own terms? We saw rumors pointing to maybe massive potential client wins.
Right. There are unconfirmed reports pointing to a possible Fortune 500 client onboarding Circle's platform sometime in Q4.
A Fortune 500, that would be huge.
Monumental. If this actually materializes, it wouldn't just meaningfully boost transaction volumes. It would serve as a powerful validation of their enterprise-grade offering. It would prove the platform is ready for massive scale and, importantly, the compliance demands that come with it.
Okay. And leveraging that existing partnership momentum, there are whispers about going much bigger internationally, too.
Indeed. Rumors suggest major international expansion announcements might be imminent. Specifically, entry into new key markets in Asia or perhaps the Middle East. That kind of geographical diversification would provide a substantial new runway for growth, especially in regions with high demand for compliant digital dollar alternatives.
Lots of potential upside there.
Definitely. However, we cannot discuss all this speculative upside without addressing the regulatory tightrope they're clearly walking. This is the ultimate sort of non-negotiable risk. Speculation exists that upcoming U.S. regulatory announcements could materially impact the stablecoin issuance or the compliance landscape.
Right. This is the big external factor that can just overshadow everything else, isn't it?
Absolutely. Regulatory developments are the ultimate wild card for the company's core business. Their entire ecosystem is built around the regulated issuance and management of USDC and EURC.
Yeah.
Any major shift in policy, say, new restrictions on reserve management or maybe increased compliance burdens would have an immediate material impact on their profitability and their ability to scale.
So the current regulatory environment is just a major unknown they are fundamentally exposed to.
Fundamentally exposed, yes.
Okay. So we've got stability, institutional validation, clear financial milestones, and then this volatile mix of high-impact rumors and pretty significant regulatory risk. What does this all mean for the listener considering that key question? Is it a good time to buy now?
Okay, let's try to synthesize this information for you. Circle Internet Group enters Q4 2025 with strong institutional backing, yes?
Right.
And demonstrable momentum from global partnerships and product initiatives. The key tension really is that institutional stability versus the regulatory risk. The outlook is defined by strong potential upside fueled by those M&A and client win rumors we talked about. But this potential is significantly countered by substantial regulatory and market volatility risks tied to all those unconfirmed factors.
So buying now is a bet on a couple things happening soon.
Pretty much. If you are buying now, you are essentially making a directional bet on two main things. One, flawless execution in the Q3 earnings coming up on October 22nd. And two, maybe more importantly, you're anticipating a favorable outcome on the regulatory front, probably before January's preliminary results are released.
Okay. And here is the final provocative thought we want you, the listener, to mull over. Given that the company's foundation rests almost entirely on its stablecoin infrastructure, how much of Circle's current, let's say, $29 billion valuation is already pricing in either a favorable or an unfavorable U.S. regulatory outcome for stablecoins?
That's the critical question. If the market broadly believes restrictive regulation is coming, that $29 billion valuation looks, well, unsustainable. This regulatory expectation, probably more than internal operations right now, is the single factor that warrants the absolute closest exploration when you're deciding your position today.